Well, 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 ladies and gentlemen. The atmosphere is somewhat solemn. Bitcoin takes a bit of a tumble to the downside. Yeah, the question that I want to ask you, and I don't know if it's fitting for it, but did you pay yourselves? I usually say it beforehand when everything's going to the moon, but I get scrutinized for it. What are you telling me to pay myself for, man? This thing's going, okay? It's going. Look what happened today. Don't like to see people's comments got wrecked and all of that madness. We wanted the all-time high. We got the all-time high. And a very poor all-time flop. But where there is chaos, there's opportunity. In tonight's live, ladies and gentlemen, we're going to break down a few of market makers' processes that they like to get involved in. Okay, I can see you guys chatting away. No, I ain't saying the told you. I closed off my Ethereum trade. Yippee-ki-yay. The idea of trading is, of course, to try and take a profit. Now, for the holders, it's a different story. This is an opportunity for those guys. And it's also an opportunity for the traders. But when you're using leverage, you're literally on a tightrope. And you can get smacked. Or a market maker can simply go, and ciao, ciao. Tonight's live, I'm going to give you a bit of a breakdown on how to anticipate these sort of moves. You'll never know when they can happen. But if you pay close attention to the way the candlesticks move, and be mindful of the order flow, you're going to improve the odds of maybe being on the right side of the move rather than the wrong side of the move. If you're there asking the question, I've got myself X amount of profit and I don't know what to do or where I should close, you should already be considering closing or having a trailing stop in place to make sure that if anything like this happens, you're covered. So, ladies and gentlemen, Let's have a conversation. By the way, my name's Tino. If you are new to the channel, welcome to Traders Reality. Only a few hours ago, we were like, yeah, Bitcoin to the moon. We needed to see that 69K. We got that 69K. I don't need to wear a vest. Happy days. And then that happened. So let's get into the flavor. Sam, I told you to clean the glasses, man. Let's get on with the conversation, guys. All right, then. Funny thing, the psychological levels, eh? Very interesting. I mean, just look at it. Now everyone's coming out on Twitter, X. Told you so, flop, flop, flop. It's going to be going down. That's it now. Bitcoin is done. The faster they move down, okay, the more we are inclined to believe that maybe this could be another load up before they try the all-time high again. I'm going to mark off specific areas that we need to be very careful of, just in case that is not the case. See, all we've had, ladies and gentlemen, going from the start of the weekend is continuation up. It's not stopped. The same way market gives money is the same way it has to take it back. This is taking it back, okay? Looking at other assets across the board, I mean, damn. Matic was only down 1%, and I was pretty gutted about it. Now it's down 11. JASMY coin, I mean, that's doing all right, but not really. I mean, it's taken a bit of a tumble. XR... Ethereum, which happened to reverse from the block support range. Pretty interesting. I'm glad I got out of my trade. So there we go. That was the trade. Closed off. Done. Only because the fees were smacking me and it was a horrible thing. But a $400 move in Ethereum, nearly a $500 move in Ethereum served us well. Okay? That's why we pay ourselves, ladies and gentlemen. Get the money out of the charts so that you can take advantage of putting it back in again. That's the whole point, man. Look what happened to it, man. Not bad. What a close. Closed it right at that spot. Down it went. Could have opened a short. Shoulda, woulda, coulda. But no, didn't trade today. I traded a couple of funded accounts, tried to pass a few challenges and passed a few more today, but didn't touch any of my live funded accounts. It was just a bit of a mad day for me. I was tired, you know? But whenever you take a profitable trade or you've had a good run, it's always good to come back, scale away from the charts for a little bit. And this is a perfect time for us to step back. Why? Because we have got good old Powell talking tomorrow. Now, the markets could be getting set up for what Powell is about to reveal. Word on the street says that it's somewhat hawkish. Okay? Going into today's data, we just refresh that. Manufacturing sector, it's come down. That's good news, which is why today we were anticipating a move higher. Now, here are the setups that I provided. And remember, guys, there is 20% off the Platinum membership where you get setups like this. It's pinned to the top of the chat, the discount code, which is Bull Run. Use that at the checkout, and you get 20% off your first month. Euro today, we wanted to see Euro come up and take that one. Well, I initially wanted the 108,700 with a little bit of optimism to try and see it go even higher. But we wanted, if you took profits at that point, happy days. We go into Ethereum. I'm going to break down Bitcoin because I've got a little lesson for you all. And there's that Euro trade right there. On the news announcements, they came into play, shifted to the upside, and came and cleared the 108,756. So that was successful there. We go into gold. Gold just took the mick. We wanted to see 2,140, and gold ended up taking 2,142. Oh, sorry, 2,141, and then reversed from that. Happy days for gold players. We then go into cryptocurrency. Well, actually, let's go and have a look at oil. I think oil did it today and came back up towards that 80 zone. Let's just go and have a look at that for a second. Did oil do it? So that would be 15 minutes. So it came up towards that region, the 79 zone. Yep, so we were waiting for that, and they came up. From the actual projection itself, we were inside of this range. They did the stop run lower to come back up again in towards that block range. So happy days for that. And then finally, we've got Bitcoin. So we saw both of these setups. Not both, but we've pretty much got one of them coming. That's already been achieved. They hit the 69,000. Happy days. That was setup 1, okay? And now setup 2 could be on the cards. But then again, Bitcoin has actually gone back down towards, well, setup 2. There you go. Setup 2's come into play. So had it gone down towards that midpoint of the vectors, 64,500, okay, you can see that 64,500, it broke that range, but instantly it's made the reversal back up into it from the psychological level. So there or thereabouts. Ethereum, same story. She came up and swept that 3,800 region. Happy days. Then Solana came through, I believe, come up towards that 136. Did she do it today? There she goes. She went up to 142 from the projection that we sent earlier. So happy days for the guys over there. We also did this today on the NASDAQ and the S&P. So if we actually mark that off over there and have a look if we've actually got it. No, it's taking too long. Never mind. We'll kill that. Doesn't matter. But we wanted to see something interesting on the NASDAQ today, which I will show you. We had projected out that NASDAQ needed to come down towards this range right here. Okay, the Platinum members will know, and if you have joined the Platinum membership, you'll see this. I shared it today after the New York Live, and what we had anticipated was a move to the downside to fill this gap, okay? And they achieved that, and then they aggressively reversed from that point. So that's when you are, I mean, today was a bit of a tricky day with the NASDAQ and the S&P, man. It was just not stop going down, just kept on bleeding out, and then come towards the end of the day, 8:30, they made the move. Now, I'm always looking at it from 4:30 to about 6:30, but they made the move today at 8:30. So that's all good. Anyways, moving on, ladies and gentlemen. What are we going to talk about this evening in regards to the way the market maker operates? Well, listen. Before I continue. T, isn't there 3 green vectors on the daily that need to be recovered? Look left. Yes, I mean, let's just look at it from here. So we're going to address these. There are 2 things we're going to talk about right now. Well, 2 people that I am talking to. I'm going to talk to the traders and I'm going to talk to the holders, right? Now, the traders, it doesn't matter really what direction Bitcoin moves to. You're just looking for movement. But the holders, there is an opportunity where you can engage in the 20-20-20-40 principle, okay? These are the instances where you engage in the 20-20-20-40 principle. The 20-20-40 principle says that you're using 20% of your commitment. Well, you split your capital into 3 increments of 20%. So 2, 4, 6, that's 60%. And then have the 40% behind you waiting for a specific play, okay? So let's just go to the daily time frame for the holders for a second. What do we have? There's that nasty blue vector candle. It always seems to be that the blue vectors tend to give us the idea of a reversal, okay? Now, I said this week that if you consider the vector candle points or the midpoints of the vector candle, this is what the holders should really be doing when they see this sort of situation happen. Had you done it yesterday, okay, you would have had this level right here marked off on the chart and you would have been fully aware of it, okay? If you went into it over here, you did the same thing right here. You have your midpoint of your vector. I'm only considering the candlestick, not the wick, all right? That's the daily. Quite frankly, ladies and gentlemen, for the last, 1, 2, 3, 4, 5, 6, 7, 8 days, I'm not taking into consideration this. I'm not interested in this. Why? Because price had consolidated here and then decided to make the break to the upside. Cool. But you can see over the last 8 days or so, Bitcoin hasn't stopped going up and their consolidations have been nice and they've continued to mark prices higher. So a holder's going to look at this and say, all right then, Tino, we are so close to that all-time high. Look at that, $69,080.62. What a terrible rejection. And they sure killed the mood when they rejected from that range quite aggressively. Now, this was, of course, led to the S&P and the NASDAQ moving lower. I mean, if we go over and have a look at what's going on the spot Bitcoin ETFs, the flows, you can see Grayscale's down 2 billion and BlackRock is only down 720 million. So you know that they're picking it up because their value of their portfolio is still relatively near enough the same as what it was earlier on today, even after this drop, okay? So that tells you they're stacking. They are stacking this, and today was a perfect day for it. Now, let's just go over to the Bitcoin ETF itself to have a look at what's going on. You can see here that we've got quite a few distribution days on the S&P and the NASDAQ, which is consistent with selling in the marketplace. But what we're going to do right now, when this chart doesn't behave like this, we're going to look into Bitcoin's ETF. I will wait for that. We'll go over here. Go have a look at the ETF over here. Happy days. And you can see, it looks like they want to start recovering those gaps. Now, what I'm going to suggest to you guys as holders is the following. Let's make an assumption that these gaps are going to get recovered, and that's the gaps in the ETF. Let's make the assumption that they're going to be buying the Bitcoin, okay, with the intention of effectively seeing it increasing later on. All right, then. So go back into Bitcoin. What do we see? Well, in front of us right now, this candlestick finishes in 1 hour and 41 minutes. This is important. When it finishes in 1 hour and 41 minutes, you are effectively going to determine the midpoint of this candlestick. Now, I don't think Bitcoin is going to really move that much in this time that I'm going to be doing it. So I'm going to take the top side of the vector of the wick and go down to the low. Now, where's the midpoint? Well, the midpoint is right here, and I've got this red vector candle region that is available for us. What's going on here? Oh, okay. Take the midpoint of the vector candle and go into it again. Now we have 2 zones in Bitcoin's chart. Let's go into smaller time frames for the holder. 4-hour chart. What do we see? So we know that these 2 zones right here at 65,523 and 64,026, this is where the bulk of the movement to the downside came. This is the bulk of the movement to where Mr. Market Maker had attacked all of this liquidation. I mean, it's just phenomenal, okay? And the sooner you come to understand that this money right here is borrowed money. Open interest has been going out the roof, right? That's money that is being given. Remember what we spoke about earlier on today about the individual retail trader. This is the retail trader, this is Binance, and this is the market maker. when the market maker, or should I say retail trader, is going to borrow money from the exchange to leverage trade, he gives that order to Binance. Binance pings it to market maker. Market maker pings it back to Binance, gives the retail trader 100x leverage, $100 trade to favor a move to the upside. When it goes up, it's the market maker's money. When it goes down, it belongs to the market maker because you're going to be at a loss. Okay? It's funny, isn't it? How in both instances, when price goes up or down, it's still market maker's liquidity because market maker's goal is to provide liquidity. Okay? Now, the reason why this happened today, we don't know. I mean, we can talk about some news events that could be coming into play, okay? But the news that came out for the dollar today shows that the economy is slowing down, but still above the 50. So we're still in a expansive place where we can expand economically in the economy because the reading came in above above 50, but it contracted, okay? But it's still above 50. So the economy's all good. And as long as the economy is all good, Mr. Jerome Powell may not be so reluctant to cut the interest rates so that he can then achieve the 2% mandatory inflation goal. Oh my days, this dollar is an absolute joke. Anyways, we'll park that and we'll talk about that tomorrow. Now, when this move to the downside, okay? This could be market makers kicking into that negative delta where they're buying spot and selling, okay? This could be the result of that, all right? Now, for the holder to understand if Bitcoin is going to come back up from this point, he has to embrace that there could be a potential for Bitcoin to come back down to other zones. Those zones are 55,737, and then of course this area 59,729. Okay, now if you were to split it up in terms of the portfolio where you would use the 20-20-20-40 principle, okay, you would effectively say, okay, today I put 20% of the capital right here. You wait, you get up the next day, you see Bitcoin's tumbled down even more, and it brings it to around this range right here. You load up another 20%, okay? Now, this is on the 4-hour time frame, okay? So I've got 20% of my capital, 20% of the capital, and I've still got 60% behind because I've got a big sum of 40% and a remaining 20%. Now, if 20% is too much for you, there's nothing stopping you from splitting this up and putting maybe 10%, okay? But let's just, for the nature of demonstration, let's just assume that we're going to be using 20%, all right? The working capital, in my opinion, should be the 320s. So if you have 10 grand, 6 of it is the working capital, where you segment, or should I say, pick your spots on when to actually get in. Because the problem with DCA is people want to try and raise as much money as they can to quickly chuck it in just so that they can engage on the idea of Bitcoin being cheaper. No, don't do that. If the idea that Bitcoin is trending to the upside, then this move down, however low it goes, well, ideally it needs to stay at the 51,000 zone because that is still a valid retrace for Bitcoin. This mad thing right here, ladies and gentlemen, let's just go over to it for a second. Hold on. This crazy asset right now for the quarter is up 46%. It was actually 56% up for the quarter, all right? All the way up there. So come on, man. You've got to accept a little bit of a retrace. So now you've got 20% of your capital. You wake up tomorrow, it's another 20% there. Even if Bitcoin were to come back down towards this area right here around the 51,000 zone, then that would mean that you could effectively load up on a 20% region there. Now you want proof of the move. Say, for example, Bitcoin starts to consolidate sideways and then sweeps lower, okay? You've committed your 20%, 20%, 20%. You've still got 40%. If it sweeps lower and they break beyond the 800 EMA, which would take us to 43,000, that would be a deep correction, but it will also be a very good discount where you could effectively exploit a good V-shaped play. That would be where your 40% should sit, okay? Now, as the 40% sees a benefit and goes up and up and up and keeps on coming back up, at least towards where your second 20% had been entered, you close off the 40%. The 40% of the capital has to be the balance behind to protect you, just in case you're in a bit of a drawdown on the 20s, okay? It just gives you an opportunity to load up. because then that 40% on profit technically is increasing in its value, which means that the next time it does pull back, you can then load up again on a 40%, you got more of it, and then it goes up. Effectively, you're seeing a return on your 20s, and then you're earning more on that 40, but every time it moves in your favor, take out the 40%. You work with the 20s. Now you can just work with 20, 20, 20, or you can work with 10, 10, 10, and then you've got another 10%, 10%, 10% that you can work with, all right? Split your capital like that, ladies and gentlemen. Don't go deep into it straight away and commit all your capital, all right? You've got to have some behind, because those of you, okay, that are in that position where you're able to take advantage of Bitcoin being cheaper right now, hypothetically, if you had this 2020 story already in your mind, today would be a perfect day on the idea that Bitcoin holds this zone at the 50 EMA on the 4-hour and continues back to the upside. That is logically what you would want to be doing and DCAing here. That would be a good spot because we've had an aggressive move down, okay? So it was a nice climb and a retrace lower. The reason why it works for Bitcoin, and in some cases it does work for Ethereum, but Ethereum is very volatile, all right? So my opinion is that if you're going to do the 2020, 2040 approach, I'm going to call it the 420 approach just to save me repeating myself every 5 seconds. The 420 approach, typical. The 420 approach itself can be broken down into 5% increments. You don't have to do 20, 20, 20. It's all down to your risk tolerance. You can take that 20, 20, 20 and think of it in terms of buy-ins in poker, okay? If you are at a poker table and you get a pair of aces pre-flop, but you sat with 100 blinds, are you going to shove all in pre-flop when it's just you against 3 other players who have gone all in? You wouldn't. You just wouldn't risk it for 100 bigs. No, you wouldn't. Some people might challenge that and say, yeah, that's great value. Well, okay, cool. I get 3-1 on my money. If I call and I've got 3 people in going against me, right? What's my range? Well, it can only be kings, queens, jacks, and some idiot that will shove with jack 10 offsuit, okay? Then the board hits. That donut with the jack 10 offsuit hits a straight. And then the turn comes, dead card. The river comes, I would have walked out beforehand anyway. Okay? See your balances like that. Don't risk too much. Now, back to the poker analogy. If there were 3 players that made a raise, 1 player called and another player re-raised, I would flat call it just to induce them to get in. Now, when the board comes out, different game of poker. That's how you should portray or behave with your capital. Are we all on the same page, ladies and gentlemen? RTB, thank you for the gifted memberships. Okay. Mr. Kaya, good evening, Tino. I call 80K before the 20th of March and after we drop to 50K. Would you say is possible? Well, I said I think the 25th of March, I said Bitcoin could get to 100K before the 25th of March, which is the, did I say 25th of March? Yeah, 25th of March, which was the FOMC press conference, okay? Now, look, we've only moved 7K, well, about 6K away from the all-time high. So we're sort of good where we are, but we would have to see some significant movement up. And the focus on these 2 red vector candle regions are very important for us all, especially the holders. You go into the 3-day chart itself and you can see there's a stop in volume candle, and this candlestick finishes in 1 day's time and 2 hours, okay? So that could be consistent with the top, okay? Remember, Bitcoin hasn't stopped, and a lot of guys are shorting this and they just do not care. They They just want to short Bitcoin. They want to be the guys that caught the short. And I think there's a lot of guys that are trying to catch the short. But could you imagine? I'm going to present something to you all right now, okay? Now, you're either going to say, oh, Tino, man. Well, listen, if you only want to hear fairy stories, okay, go to X, all right? Go somewhere where someone's going to be like, it's going to keep going up. It's going to keep going up. I'm going to present an idea to you, or should I say an opinion. Now, just stick with me. Looking at Bitcoin's price action, we've got 1, 2, 3 hits. Each of these hits was when the stock market effectively topped out. Now, going into this, okay, why is this not working? I don't understand why this market surge isn't working. I need that to be working. Anyways, never mind. It's not working. Or is it? No, it's not. Okay. So that's Bitcoin, okay? Going into the S&P, right? This is here. This is where Bitcoin effectively made its all-time high, right there. Came back down, marked up, made its all-time high in the January the 21st. And then, of course, let's just make that right. January 2022, December 21, it rolls over. Go back to Bitcoin. November 21, it started to roll over, sorry. Okay? So, NASDAQ and S&P. We are at all-time highs, okay? But we've got a big event happening very soon. The FOMC. You've got this painstaking debt situation for the Fed. Everyone's calling for a black swan. Something is brewing. Debt keeps going up. High interest rates are present. Foreign investors are going to keep on fueling this rally if the yields keep on staying high, because that's foreign investors buying up dollars to lock in good yields, okay? When they recover and snap back, it's going to be treacherous. Now, here is my opinion. What if Bitcoin, stick with me, what if Bitcoin just continues to correct? The stock market corrects and Bitcoin comes all the way back down to 40K, even rolls into the 35 subzones, all right? Halving event comes into play. Volatility comes in, happy days. Bitcoin comes up again towards its all-time high, sweeps it, 72K, for example, and then comes back down again, back into the 50 zone. In other words, historically, looks like Bitcoin struggles every time it meets or hits a very monumental point. This is like a gauge for the market maker or liquidity providers to exploit traders. Why? Because futures volume does dictate spot. It has an impression on it, but we're in a different time frame right now. We've got BlackRock. We've got heavyweights that would be buying the ETF. But ladies and gentlemen, these guys have got enough capital and they work on the weekly, the monthly time frames, okay? They look at it as, okay, Bitcoin has been moving up for the best part of 2022, back into 2022, all the way up to 2024, April, okay? Like, this thing hasn't stopped. We're probably going to start pulling back or scaling back ever so slightly, even though we've had significant volume coming in on the ETF, okay? It doesn't mean that they're going to try and preserve their gains. They're going to want Bitcoin to drop because then they can pick up more and they can step in at the right time. And once they start stepping in, then everyone else is going to start stepping in and everyone gets excited and then Bitcoin continues back up again. But what I'm trying to convey to you all is, could you imagine this would be the true store of value if Bitcoin just stays inside this range? Could you imagine? Comes up, comes down, comes up, comes down, comes up, comes down. We have a freak event, back 100K, aggressively back down. Could you imagine if that is the case? The stock market is going to be the leading indicator for it. That's my opinion. The halving event will come and go, and then it just goes back to business. Other than the halving event and the spot Ethereum ETF, there is nothing in crypto that would encourage Bitcoin to go to 100K. But that's now, for example. Let's say the halving event passes, ETF for spot for Ethereum comes into play, and it doesn't get the same response, okay? Mark Cuban did say earlier on that when enough people hold on to it and not sell it, that's logically going to be sending Bitcoin's price higher, all right? But it's these squeezes that the market maker will effectively be doing. There is nothing stopping Bitcoin dropping like this that we see on the monthly. There's nothing stopping it. And you've got to accept that that can be the case. How you prepare yourself for something like that, of course, the 420 method, okay? This is the first big down day for Bitcoin in a long time. I mean, with the exception of this candlestick right here, Friday the 12th of January, okay? And then it led to a significant move lower. So let's just do some maths right now. Let's just do some logic here. Not math, but you get what I'm saying. Bitcoin drops on that one day, okay? It drops, how much is it? 11%, all right? From that point, it continued to go down and dropped 17% in total from that point, okay? So now let's just take the same logic, okay? Let's now assume if Bitcoin, from the top to there, well, it's already dropped 14%, okay? So the drop was a bit more significant. Now, 11%, hypothetically, drop down another 5%. Okay, so let's drop down another 5%. That'll take us to 1920. That sits in line with the vector candle recovery zone. Okay, this is where we could assume that they're going to go and load up from this point. This is important because you're now seeing opportunities to load up. All right, you stop loading up when Bitcoin surpasses the 50. This is the zone where you say, okay, I've committed 20, I've got another 60 behind me. I'm going to wait and see. If it hits this zone right here and aggressively at that, you might want to sit tight because you could get a better discount. True Bitcoin holders are about accumulation. They're not interested in price. They just want to hold it. But there are also holders who are conscious of their entry. They want to know that they're getting the better fill. And it's these sort of scenarios that you want to prepare yourself for and be ready to act as and when it comes or presents itself in the chart, okay? So let's take a step back. NASDAQ and S&P are currently accumulating all sorts of behavior. Like, let me just go over here for a second, right? Kill that. Why does it do this to me? Anyway. NASDAQ and S&P have accumulated 5 to 6 distribution days. A distribution day is when volume is selling above average, all right? If this is the top for Bitcoin, which will then see us going into the next FOMC meeting, because the next FOMC meeting is in March. Look, we go into it. Where are we at? 25th of March? There we go. 20th of March, sorry. That's the next FOMC press conference. They give us any insight into potentially cutting the interest rates by June, then that's going to be good news for the market. So what do we have before that? Well, we've got tomorrow's data, ADP non-farm, JOLTS job reports, okay? Then we have the ECB press conference, Powell speaking on both days, average hourly earnings, non-farm employment change. And if the average hourly earnings then comes in again higher, that means inflation is going to continue to go up. If people are earning more money on an hourly rate, that means people are in demand, but more importantly, the result of that. Don't worry about why it's going up. Understand the result of it will tell you that people will be earning more. Inflation is more than likely to go up, which then takes us into Tuesday the 12th. Next week, CPI data. What are they projecting? 3.1. That comes in above 3.1. We have problems, because then it just solidifies that by the time the Fed comes to the FOMC meeting, we're very data dependent and we're not going to be doing anything until we see more data. If they don't see inflation come down at least to 2.8%, I don't believe that they're going to cut the interest rates. But they need to see the economy doing well to not worry about keeping the interest rates high. And if the economy starts to pull back, unemployment rate shoots up, then that's effectively what the Fed wants, to slow down inflation. But then if they do see it slowing down, will they cut the rates? And this is the problem. Banks are the ones that are struggling here, believe it or not. Okay? What we got here? Ethereum's doing what? What's Ethereum doing? Let's have a look at Ethereum for a second. Ethereum coming back up. Not bad. Not bad. There you go. That's nice. Block support. It's coming back up nicely. See, Ethereum's a little bit more volatile. All right. Now, there we are. Nice flavor. Blue vector. Problem with the blue vector is they can come and recover that. Okay? Because this could be short covering. There could be traders right now that are actually closing their shorts, believe it or not. They're probably paying themselves, which is naturally leading price to mark up again. Okay? What else we got here? Hey, Tino, do you hold Bitcoin? No, I don't hold Bitcoin. I want to buy it, but it's not cheap enough yet. I want to buy it when it hits a specific price point. You know. You know what price? I'm not going to say it. Okay, any questions on this fundamental flavor? Okay? Any question? I want to buy the Bitcoin ETF. Okay? Let me address this again. Raskla. Let me address this question. Me, frankly, okay? Now, this might challenge a lot of you here. But if I buy Bitcoin, that'll be principally just me buying Bitcoin. Right? I hold a bit. Right? I don't hold a full Bitcoin. I hold a bit. It's really small amounts. Okay? And say I want to go and buy it. If I buy it now, I need to go and see Bitcoin 120K to make my money back. If I go and buy one Bitcoin, hypothetically, okay? That is for me. That is a poor return. If I'm frank with you, I'm not interested in waiting for Bitcoin to go. I'm not interested in that. Okay. But I am interested in buying the ETF. That's facts. I'm very interested in buying the ETF. The only reason I'm interested in buying it is because I can buy more of it. So rather than buy one Bitcoin, I can go and put 60K right now. I could go put 60K right now into this ETF. That will be splendiferous. I would only need it to mark up to about $40. I'd make a nice return. I'd make a nice chunk on my balance. But I got to wait for Bitcoin to go 120K just to make my money back. Please, bro. I ain't got time for that. That doesn't mean that I don't believe Bitcoin can go higher. But people are holding on to a logic that as long as Bitcoin stays below 69K, that logic is irrelevant until we start breaking away from that point. It can look somewhat closer. I can anticipate it. I'm at 70K. Oh, 75K. Well, could go to 20. You could go to 100K. You know, I believe that, man. I believe it. All right. But when Bitcoin going to 100K and it's sat at 25, I mean, look, okay, it's come all the way up again. All right. But look how long you had to wait for that to reassert the idea of it, that you will believe it's going to go to that. Bitcoin is volatile, shoot up and shoot back down, and you've got to accept that. But if I was held at gunpoint, I'd pick the ETF. I've got all sorts of cryptocurrency. I've got Ethereum, XRP, Phantom, you name it. Okay? I've got a bag of cryptos that I just dive into, but I stake a lot. Okay? The Bitcoin that I have got has been earned, okay, in farms from back in the day. All right? And it's only small amounts. But if someone did do that to me, I'd pick the ETF. That doesn't mean I'm not about for Bitcoin, but I'm a trader. Okay, I'm about that fast in, fast out behavior. That's my mantra. Okay, I'm all about that. Can I get a profit? Yes, I can. Cool. Okay. That's why we do what we do. You know. Brandon D. Tino, look at my question for once. I've asked twice a day for the last week, but answered dumb questions like, is it going up or down? So where's your question? Let me just have a look. Look, Tino, where's your question, my friend? Tino, what could possibly be the reason for that Bitcoin drop? Because many people sitting in business say it will go to Valhalla. I want to understand your thinking more. Well, anyone that says that Bitcoin's going to go to Valhalla, you really have to question the idea of who you're listening to. Valhalla, okay? Or to the moon. Yes, we are very optimistic about cryptocurrency, and we would like to maintain some form of professionalism when we are talking about this very serious game, which we call trading, okay? But you have to understand how the business model operates. Money is being borrowed. And it was being borrowed for quite a significant amount of time. And no one was paying themselves. No one was paying themselves. And the reason I can prove that is because these have all been transacted on. That's why the market went there. Because they're just liquidations. People were chasing the margin. Quickly load up, quickly load up, quickly load up. They got caught out. We could be in different time zones, okay? People in Australia might have been asleep. Bang, they wake up. Oh, my days. I've been liquidated. When you understand that that's how the business model is, that they are giving money, okay, to give you the luxury of being able to go long using less liquidity and borrowing from the exchange, well, it comes at a fee. My trade cost me $800 in fees, man. A $400 initial trade cost me $800. What a joke. That's expensive. For fees. For nothing. It really is nothing. Like, they're just taxing you hard. Luckily, we made a good return. You know? Now, let me see it again. Where was it? Oh, well, there's the fee right there. Closed off $12. No way. The funding fee smacked me 800 notes. So it should have been nearly 17K. But they smacked me for it. And that's why ever so often, I'll take a swing trade on cryptocurrency. Ever so often. Because of that. When I trade on the S&P, I have fixed fees. You know, depending on the lot sizes, fast in, done. 200-300 quid for 200-300 trades. Something like that. $300 for about 100. Yeah, I think about 100 trades. There or thereabouts. That's great, you know, but I'm transacting continuously all the time. So where's this Brandon's comment? Tino, what if I want to transfer 420 hodl strat, but opened a long 2x position from 24K Bitcoin and still holding it tight? Look, man, if you've gone long at Bitcoin at 24K, you really don't need to be worrying about anything, okay? But if you are looking to load up from 24K, my friend, you could take the 420 principle, but I wouldn't be considering buying Bitcoin, okay? From 24, I wouldn't consider doing anything unless Bitcoin come back down to 50. That's when I would start paying attention, because then that would put me in a position to say, okay, if I can't see Bitcoin show commitment at 50K and give me the same response that it did from this point, because ladies and gentlemen, down here at this point, each of these candlesticks on the daily time frame is the block trade principle, okay? But it's on the daily time frame. It's very important, all right? The block trade. Bitcoin can reverse from each of these vector candle points. You can see it already did that there, all right? So it's very important that if you do see price get to there, that's when you start paying attention. From $24,000, you're laughing. All right? You start loading up from here. It's just pointless in my opinion. Okay? Wait for a deeper correction if it does come. And the only way that we can know it's going to come is if the start of the next daily candle can show proof of breaking higher. Because remember what I said to you all. If price does not break the 5 and 13 EMA on the daily time frame, you are good with your longs. This is for the holders. Okay? Broke the 5, went into the 13, but it's now come back in. This is a critical point for Bitcoin. Now we can get really technical and start taking the midpoint of where the 5 EMA is to where this point is as a principle of volatility. So this is the next range. 61,612 is the point where Bitcoin will prove if it's getting ready to break down. This candlestick will confirm if it's a sweep lower to come back up. because the red vector will always get recovered. And if we are in that upwards movement, then we're going to see Bitcoin continue back up again. Okay? But you've just got to wait and see. This is the daily. So that logically says the next candle, all right? The close of the next candle will confirm if that is the case. If the next candle comes in and closes below the 13 EMA, you've pretty much got your confirmation Bitcoin is going to break down, because the only next logical spot is to eat the liquidity of the green vectors inside of this zone. Are we all good on that? Yes, 2,700 of you are watching the live. Thank you very much, man. Honestly, God bless you all. 627 of you like the stream. Again, if you are new, make sure you like the stream. Subscribe if you've enjoyed tonight's flavor. Hit the bell because we got big news tomorrow with good old Powell. All right, so that's going to be a bit of a market mover. Okay, here we go. Here we go. The 2020-2040 strategy is not difficult, but over what? Hold on. But over how, which range are they distributed? That's going to be down to your risk, okay? It's your risk. Ideally, it's for the holder. So the holder's going to be working off the 4-hour or the daily or the weekly or the monthly, even the 3-month chart, okay? But it's down to your risk. If you've only got 10K and you want to commit 20%, that's $2,000. Are you cool with putting down $2,000? If you don't like the idea of putting down $2,000, split it in half. Only put 1,000. Drop down to 5%. But those 320s, that's down to your risk tolerance. Forget the 40%. Ignore it. That's only for situations like today. It has a very short time scale of exposure. That's what you got to understand with that 40%. The 20-20-20 effectively can be kept for a longer time frame because it's how you decide to split it up. Now, if you incorporate the 420 method, okay, on smaller time frames, you're going to be a busy trader, okay? Very busy. Trying to split up 5%, 10%, 3%, 6%. Oh, man. I mean, you could do it, all right? Say you're going to come to the charts and be like, today I'm only going to commit only 20% of my capital and I'm going to scalp Bitcoin. I'm going to build positions on the idea that I think Bitcoin is going to end up higher in the next day, okay? So then you take your 20% and then you split it up into 4 trades at 5% exposure. 5%, 5%, 5%. Pick your spots, okay? You can even go into the idea of smaller time frames. So we'll just do this for you all and then I'll let you guys be. Hypothetically, say you were building shorts on Bitcoin, okay? And you wanted to know if that was going to be the case, if Bitcoin was going to go down, all right? But you're seeing price being marked up, okay? Well, you've got this area here, green vector block. And then you've got this area here, green vector block up here, all right? So hypothetically, say you're building shorts and you've got this vector here, okay? Now, we know it came down, but it's the thought process because we're going to see this structure sooner or later. It's going to happen again. Could happen at 61,000, could happen at 21,000, it could happen at 81,000. We're going to see exactly the same structure in the future, okay? The block says here that if you started building shorts, all right, and you started from this area, you've got the block right here, okay? You've seen this green vector candle, and now you've said to yourself, you know what, I've got my 20%, I'm going to build my short. So you see the green vector, you open up 5% inside of this range. Happy days, there's your 5%. Now, for you to prove to yourself that you could find another opportunity to load another short, right, you would need to see Bitcoin, as it's coming down, break back up above this point. Otherwise, your next short, okay, could effectively be opened at this point right here on the idea that it breaks down from that. When you see it break down from that, you're trading logically towards the next zone of vectors, which means you're looking for this point right here. You look towards this range, you look to this range, you look to this range, okay? Now, you go back in the charts, ladies and gentlemen, and you find something similar like this, you will see it's come back to it, all right? Let's go into the future, because I know you guys are like, yeah, it's easy to talk hindsight. Don't worry, okay? You'll see another instance like this, where you've got vector candles that have not yet been recovered. If the vector candles are not recovered, then you can assume that you can start building positions into that logic, okay? Use the blocks. Take the top of the vector, take the low of the vector candle, close the candles, all right? And make a decision. 5% at that point, okay, cool. You take another 5% at this point, happy days, that's 10% of my capital, all right? It's come back down. It's reversed. I've got another block right here. So whilst that's happening on the 5-minute time frame, you're waiting to determine if this area here is going to be an area of support. 50 EMA is acting as a bit of a resistance. 5 and 13 EMA have crossed over. So then you say to yourself, okay, and I've got another 10% that I can load into the short, okay? So I can take advantage of a short in momentum, or I can build it as it's going up, right? If it breaks that point right there, you will not continue to load up shorts. If it breaks above the 50 EMA, you will not build shorts, okay, hypothetically. Or if it does break here, you can then place shorts inside of this zone. Now, for those who do truly build positions, will only be waiting for price to rise when they build a short. But that's on the assumption that momentum is picking up and it's going to keep on going lower, and that the retrace is a short-lived, okay? So that really could be something that you could do. So you've got 5% here, 5% here, 5% either or, okay? And then finally, you see the flush to the downside, and then you might say, okay, I'm going to try and take advantage of another short at this point right here if it hits it. So you could place limit orders. It goes into it, recovers, drops back down again. Happy days. And now you've got all of your 20% locked in. And if you want to be a little bit adventurous, you would then place another short here after the recovery back up, because the green vector candle come into play. But it's also a wick that they might want to go back into. So you'd be building shorts on the way back up here, because you've effectively got profits. Because what you don't want to do is you don't want to take into a short right there. And look at where you're opening the shorts. You're opening the shorts on breakout of ranges from previous vectors. All right? It is a practice, ladies and gentlemen. It might go over your head right now because I'm talking about it here, but just, it will take practice. But I promise you, you're going to see this exact structure in Bitcoin in the future. You really will. Okay? Okay. So when I use market orders, it will close itself. Okay, get that. How much time do you think will be the correction? And is it worth it to wait more to buy coins, or buy now? Look, you've got to listen, right? No one can tell you how long the correction is going to be. No one can tell you, all right? We don't know how long the correction is going to be, all right? But what we can do is we can react accordingly. We've marked off our levels. Remember, go back and take the Fibonacci of each of these candles. Find the midpoint. Not interested in the 61, not interested in the 38, not interested in the 76, whatever. I'm not interested in that. I'm interested in the midpoint of the candle, all right? Because historically, they do stuff at that point, okay? And wait to see if price does recover it. If Bitcoin continues to go back up from there, then ultimately, if you're a leverage trader, you're going to look for the momentum. You're going to see the proof that the vector candle recovery comes into play at this point here. If it can recover it, shoot up, awesome. Take the trade. What else can you do? Don't worry yourself about how long it's going to correct for. No one knows. So if you don't know how long it's going to correct for, does it mean you don't trade? No. It means you find a spot where you think they could actually recover from, all right? And improve the probability of a trade working in your favor. Remember, there's a structure. This is the daily, okay? The next daily candle will confirm if this move is going to be solid or not, if it's going to continue lower. And we have Asia to react to it tonight as well. Well, ladies and gentlemen, I'll tell you what. Mad love and respect. Again, finally, pinned to the top of the chat is a discount code for 20% off the Platinum memberships, which runs all the way through till the end of March. You get 20% off your first month. And it's in the description of this live and video and pinned to the top of the chat. Bull Run is the code, okay? Other than that, ladies and gentlemen, I hope I've helped you tonight. Remember, like, subscribe, hit the bell on the way out. Asia's going to be very interesting. Have yourselves a good evening, guys. Take care of yourselves. Peace.